Joining us for a further look on what's playing itself out in that market scene is Muhammed Wagley from Sasfin Wealth. Muhammed, always a pleasure and good afternoon to you.
Yeah, good afternoon to you, Nolutanda. Thanks for having me back. Always a pleasure to be here.
Fantastic. Let's maybe just check in on what we're seeing on our screens here. Choppier than what we'd like. I would think that we're all anticipating a hold from the US Fed, and that would give us more stability. But maybe there's a little bit more to digest than that.
You know what? I think you really hit the nail on the head there. Choppy is absolutely the word. And it's not really just today. I think we've pretty much seen it in the week, sort of ramping up to the FOMC meeting, which we'll sort of see the outcome of which a little bit later today, probably this evening. I don't think we'll see it, impact the market too much on the day, but we should see it play a bigger impact tomorrow. It's really been choppy pretty much the whole week, just looking sort of toward that. We're not expecting any change. In fact, I think there's a Bloomberg consensus of about 98% that the rates are going to remain unchanged. What we're looking for is guidance. The tone is super important. We're going to sort of get a gauge as to when those rates are going to sort of start coming down. How long is the higher for longer narrative going to persist? So the hope is that maybe we'll see some positive news in May, but it's unlikely that anything will happen before then in terms of the rate cut. So yeah, probably we'll see a little bit of movement tomorrow and later this evening on the offshore markets.
Going around to company news, I think there's quite a bit to go by. Novo Nordisk, which is that pharmaceutical company, who knew that Ozempic could do this for a company? Of course, weight loss drugs seeming to have done really well. They're now Europe's most valuable company, surpassing LVMH. So weight loss over a Louis Vuitton handbag.
Well, I think one can imagine it's a little bit more pervasive. It's definitely sort of a lot more accessible. And I suppose, at least nominally speaking, these drugs need to be prescribed. By and large, they're being prescribed to diabetics, and that is a substantially large market, perhaps, dare I say, even bigger than the market of those people that are buying those speedy bags.
It is a very interesting one. We're also seeing, Muhammad, keen to also touch on what we saw come out of Alphabet and Microsoft. It's very interesting to see the markets having punished these counters. They surpassed expectations, possibly not Alphabet with their advertising, but overall decent numbers. I'm confused about why markets haven't then rewarded the stocks.
Well, I suppose it's a case of suffering from your own success. When Alphabet shot the lights out with their revenues. I believe record revenues came in. They missed ever so slightly on those advertising revenues. It wasn't, I suppose it was a case of untrue by an inch, untrue by a mile. And, because the market has priced in so much growth within that segment, we saw them come off ever so slightly. But when I suppose I look at the numbers, I don't see any sort of cause for concern. They're still great companies, and the outlook is still pretty rosy in my opinion. Just a little bit of, and I hesitate to even call it this, a little bit of weakness is what we saw in the ad revenue sort of segment.
Is it possible that these stocks have just run their course at this point, and markets are beginning to think that the only way from here is down?
Look, it is possible, Nolutando, but that is not sort of my view. These guys have sort of ran on the back of AI. My view is that a rising tide lifts all boats. And in this instance, AI is that rising tide. I don't think it's going away anytime soon. I think there's still quite a bit of growth potential, specifically within that segment, which is, AI has really been the buzzword all of 2023. I don't think that's going to change anytime soon. So to answer your question, long story short, there's, in my mind, still some room to go.
I must also ask you about news coming out of Transaction Capital, the desire to list We Buy Cars separately. What do you make of this, Mohammed? In my mind, We Buy Cars isn't like a CMH, for instance, that is a bit of a diverse, automotive business. It is still purely a second-hand vehicles. Does it have an investment case strong enough for a listing at this point?
I suppose it's got maybe less to do with the investment case for We Buy Cars and more to do with sort of unlocking shareholder value in relation to Transaction Capital. A potential listing could have the impact of reducing quite a bit of the debt that they've got there. And that is absolutely a huge concern as things stand currently. The market really liked this news. I mean, yesterday, nothing really much happened, but today we're up nearly 9% so when I last checked, that was pretty much the biggest gainer on the day. Nothing is finalized as it stands, but this is something that I think the market will react quite positively to. But again, I mentioned it's probably less so to do with the investment case of We Buy Cars and more so to do with helping Transaction Cap.
With that said, Mohammed, is it very possible that sometimes the market conditions aren't as strong, but by virtue of having to unlock a shareholder value, companies may go ahead and bundle and relist companies, especially with holdcos in South Africa, which are trading at, I think, ridiculous discounts?
Yeah, no, absolutely. That is absolutely possible. And, often enough companies get very creative here with a sort of restructuring because, ultimately value can be unlocked sort of through external factors and macro conditions and things like that that are sort of independent of the actual company's specific, performance. And it makes sense that, I guess, savvy management teams make the most of whatever is available to them. So yeah, that can definitely happen. I suppose is probably what is happening in this case.
Another one coming out today is Impala Platinum, lower platinum group metals weighing on the company. Of course, that's the story of 2023. I'm wondering if there's even any hope of 2024 being a better one for these platinum miners.
Well, definitely the feeling around the office, and I see when I sort of, from what I'm reading, is there is quite a bit of optimism. That being said, we're still seeing quite a bit of weakness. When we look at sort of SA Inc. in general, whether that be retail, whether that be mining, without exception, almost all of them are pointing towards port disruptions. All of them are pointing towards load shedding. And, I wish it wasn't true, but chances are those things are going to continue on this year. What could stand to benefit them are sort of strengthening first world economies. As it stands, there's quite a bit of uncertainty in that regard, but that could change. And I'd probably be a little bit more bullish on that changing than sort of the situation locally with the load shedding in Transnet. And that's despite, changes at the leadership level there.
Another interesting one today is Astral Foods. They're anticipating their headline earnings to surge by 300%. But I mean, that's off a low base. I'm wondering if it's something markets are happy for, just a recovery at this point, and maybe hoping that in 2024, 2025 is when we'll see Astral return to its former glory.
Look, Nolitando, on Astral, I've got to confess, I haven't looked at those numbers with too much detail, but I can tell you that, they are coming off sort of those low bases. They were very much hit by the avian flu outbreak last year. I think that was sort of one of the worst ones in recent memory. And I think within that context, they have performed quite well. It might represent good value at current levels, but without having seen the numbers in too much detail, I'd be hesitant to sort of put such a high conviction call on that for the time being.
Got you, Mohammed. I'm keen to get your stock pick. But before we do that, I'd like us to reflect on counters that have found favor with your industry peers.
I'm going to pick an offshore stock again, Zenati, one that's listed in Sweden. It's called Evolution Gaming. And it's effectively a company that provides content to gambling sites. What they do is they've got casino studios. So there's live games, whether it's blackjack or roulette or spinning a wheel or doing something like that with live people, a live dealer. And they give that feed, the video feed of that, plus all the infrastructure and the software that's needed to gambling sites that operate around the world, and they license their live casinos. And it's a very, very profitable business. So this company has got great returns on capital. They've shown great growth, and it sounds like the growth going forward will also be above average. People around the world have got a tendency to gamble. So irrespective of maybe your own moral qualms about it, you can make money not from gambling itself, but investing in a company that supports casinos with live streaming of casino games. So Evolution Gaming is my stock pick tonight.
We're going with Anglo American, so a bit of a contrarian sort of play here. It has come under a lot of pressure. They sort of rebased their production targets, but I think they're really being realistic about what the output is and what demand will be for the next few years. There is still the decarbonization of the global economy, and they're very well placed from that. And as I mentioned, commodity levels and prices are much more reasonable. I think we're going to see moderate growth, not a collapse of global demand. There is a potential for some stimulus in China, and so below £20, which it's come down quite significantly, it looks like a good entry point here. So that's also part of the attraction just at this point in the cycle.
I'm going to go for Mr. Price. As I said in my commentary earlier, they're trading on a P of 12 times, fairly healthy dividend yield. But, you could equally pick a bank like Standard Bank, and Mr. Price has jumped 20 Rand since their trading update last week. The banks haven't jumped at all, so still a little bit of very poor expectations on the banks. So SA Inc. at the moment is beaten down, and I think we should see some sort of improvement over the coming months.
All right, Muhammad, keen to get your thoughts on some of those. Evolution Gaming, Anglo American, Mr. Price, quite a mixed bag.
Very mixed bag. Let's start with Evolution Gaming. Very excited about that one. So happy to see it come up. Truth be told, I didn't expect to see it. This is one that we've been looking at for quite some time. Essentially, I think post-COVID, they really blew up. What this is an online casino. You've got live dealers and things like that. I think the analyst that you had on really sort of summed it up quite well. The bottom line is I really like this one. I've got to say, I couldn't agree more, and happy that sort of more people are picking up on it. Really good company. The second company was Anglo American. I suppose I think I maybe touched on this a little bit earlier, just in relation to when we were discussing the Implats. But I think from a valuation perspective, it does represent a good punt. These things are coming off low bases, and from that perspective, I really don't disagree with the analyst. Who mentioned them. I think it does make sense. Probably wouldn't be my first pick, but I can't argue that it does represent value at these levels. The last one was Mr. Price. Again, sort of the same thing. Very reasonable valuation. By and large, SA Inc. is on sale, mostly because it's embattled, really. But truth be told, I'm a bit concerned sort of when it comes to the retail sector. Without exception, everyone is pointing to weakness in the local consumer. I'd prefer having more of a rand hedge when it comes to the local shares. But again, this could represent good value at these levels. I can't really dispute that.
Keen to get which counter you're loving today.
Yeah, so I think to start the year off, I've gone for a little bit more of a speculative play. I think going a little bit more risky. Tesla's fallen quite a bit this year. That was sort of on the back of their results, perhaps last week, maybe even a little bit earlier. I just feel at levels below 200, it does represent a decent level or a decent entry point, specifically if you've not got any and you're the type of investor that can stomach a bit of volatility. This isn't that it's not just going to sort of tick up consistently every single day. This one will move. And, I'm not particularly bullish about electric vehicles this year, but I think there's a bit of a misnomer when it comes to Tesla. These guys are very much a technology company, and there's lots of other interesting things that they're doing, specifically within the energy space. So I think it's definitely something to keep an eye out for at these levels. I think it's prudent just to get some, specifically if you can handle a bit of that downside risk.
Well, Muhammad, always a pleasure having you on our show. Thank you so much for your time today. That was Muhammed Wagley from Sasfin Wealth.